Hey there, business owners. Are you thinking about taking your business to the next level and considering changing it to be an S corporation? Well, you've come to the right place. In this video, we'll break down the requirements to qualify for an S corporation, the steps on how to make it happen, and a few key benefits that could save you money and a headache. Stick around because this might just be the most important decision you make for your business this year. Let's go. Hello from Freedom Group. We are a group of 4 companies that have been providing quality services for more than 20 years in the areas of tax accounting, immigration, insurance, financial planning, and real estate, so we can help you in many ways. First things first, let's talk about what is an S corporation. An S corporation is not a type of business entity. It is a tax designation. This means that your business can be an LLC or a corporation and still elect to be treated as an S corporation for tax purposes with the IRS. So why would you want your business to be taxed as an S corporation? Because S corps offer unique tax advantages, like avoiding double taxation and letting profits flow through your personal tax return. Sounds good, right? But to get there, you have to meet specific requirements. So what are the eligibility requirements for your business to change to an S corporation? Here's the deal. Not every business can be an S corporation. The IRS has 5 very specific requirements. Number 1, your business must be a domestic corporation or LLC based in the United States. Number 2, S corporations can only have eligible shareholders. Only US citizens, permanent residents, or certain types of trust and estates can own shares. This means that no partnerships, corporation, nor non-resident aliens are allowed to own shares in an S corporation. However, there is a way that an S corporation can be 100% owner of another S corporation. This is called the Q-Sub, but that's a topic for another video. Number 3, S corporations have a limit number of shareholders. You can have a maximum of 100 shareholders. So if you're planning on going big, like Apple or Amazon, the S corporation may not be the best option for you. The 4th requirement to be an S corporation is that S corporations can only have a single class of stock. That means that everyone gets the same rights to distribution and voting, so there's no preferred shares allowed. And the 5th requirement for your business to be eligible for an S corporation is that your business must meet the qualifying business activities requirement. Certain businesses like banks, insurance, international sales companies cannot file to be an S corporation. So make sure that your business qualifies before you apply to become an S corporation. So now that you know the requirements to be able to be an S corporation, let's talk about the steps on how to become an S corporation. Making the S corporation election is easier than you think, but attention to detail is key. Here's a step-by-step guide on how to apply for the S corporation. Step number 1, create your business entity. If you're not already a corporation or an LLC, you'll need to set one up first. Make sure your entity is ready for the S corporation status by being registered in any US state and also having the IRS EIN number. Step number 2, filing for 2553 with the IRS. This is the official form to elect the S corporation status. Make sure all shareholders sign it. It is required. You have to file Form 2553 no later than 2 months and 15 days of the date your business is registered. If your LLC or corporation have been in operation for a while, then you must file Form 2553 no later than 2 months and 15 days after the start of the tax year you want the S corporation status to take effect. If you miss this deadline, there is a way to file a late S corporation election. We recommend this step be done by a professional, especially if you're going to file the late S election. The third step is to make sure you follow the state requirements. Some states like Arkansas, New Jersey, and New York require additional forms to be filed in the state to be able to be an S corporation. So don't forget this step, or you might face unexpected state taxes later. Step number 4, maintaining compliance. Once you're an S corporation, you'll need to stay on top of shareholder meetings, record keeping, and filing your corporate taxes. It is also very important that any active owner of an S corporation pay themselves a reasonable salary via payroll. Active owners of an S corporation must get a percentage of their compensation via payroll, and the remaining percentage of their compensation they can get it via a distribution. S corporation owners not paying themselves a reasonable salary via payroll is one of the most common mistakes. This is crucial to maintain your S corporation status and to avoid trouble with the IRS. All right, now let's talk about the why. Why should you go through all this trouble in becoming an S corporation? Here are 4 key benefits of your business being an S corporation. Benefit number 1, tax savings, especially tax savings on self-employment tax. As an S corporation, you can save big on self-employment taxes by paying yourself a reasonable salary and taking additional income via distributions or draws. These distributions are not subject to the 15.3 FICA tax or self-employment tax. Benefit number 2, pass-through taxation. Your business profits pass through your personal tax return, which means no corporate income tax and no double taxation on business net profits and dividends, just your individual income tax. The third benefit of being an S corporation is liability protection. Like other corporations and LLCs, the S corporation provides personal liability protection. So what does that mean? That your personal assets stay separate from your business. And the fourth benefit is enhanced credibility. Operating as an S corporation can give your business an extra layer of professionalism, which can be a big plus when you're dealing with banks, clients, vendors, or even investors. So there you have it, the essentials of qualifying and maintaining your S corporation. This decision can have a significant impact on your business taxes and the overall growth of your business. If this sounds like something that you're interested in, make sure you consult with a tax professional or an attorney to ensure everything is done correctly. Trust me, it is worth getting it right the first time. So thank you for watching this video. If you have found this content helpful, please like, subscribe, and share this video with another business owner that can take advantage of this information. Remember that here at Freedom Group, we can help you with your tax accounting, insurance, immigration, financial planning, and even real estate. So we can help you in many ways. To watch another video to help your business grow, please click on the following video. Once again, thank you for watching. See you on the next video, and God bless you.